Ladies and gentlemen, Kim here. Welcome to the Daily Update. Hope you guys had a good day trading today on this Fed Day shenanigan action, which we're going to be talking about on this presentation. S&P 500 is down about 0.5% today. Nasdaq is down about same. Semiconductor down about 1%. Dow same. Russell 2000. The banks and the energy down a little bit. Transport down about 1%. Same with the biotech. Pharmaceutical is green today, about 0.5% positive there. Emerging market down 1.5%. Grayscale, Bitcoin's down 4%. Gold, silver, and the miners down about 2% on those guys. Dollar is up about 1, oil down 0.5%, treasury bond is flat, VIX popped a little bit. Let's talk about this action from today's market trading day on this Fed day here. So you can see this is this is where we open here. It looks like this is where we let's see, 1, 2, 3, 4, 5, 6. So this is where we open right here. So this is where we closed yesterday, right here, right? And then this is where he opened. That's the first hour, second hour, third hour. And then we lost the short-term moving average. And then it looks like everybody started freaking out here. Looks like a lot of people placed their stop underneath that short-term moving average. Their stops are getting taken out. People are shorting. So you can see on the fourth hour, fifth hour, all of a sudden, selling started to come. We found support at 419, 420. As I zoom out in this presentation a little bit later, you'll see why 420 and 419 is important level, which I've been talking about right this week and last week. Should there be any kind of shenanigan move to the downside, we want to take a look at that level. So we'll talk about that just a little bit here. And then you can see on the last hour, we did see that dip buying activities occurred and then continued on here. You see that long upper wick here. So at one point, this thing was up and up and up and up. And then you can see the problem was once we lost that short-term moving average, now that short-term moving average is now supporting the bears, at least in the short term, until we reclaim it, right? We reclaim it and bulls can control that short term for their advantage. Until that happens, at this point, benefit of the doubt goes to, I have to say sellers, but I'm going to kind of stay a little bit neutral. Also, not flat out bearish yet. In the micro term, I want to say we're bearish in the micro term. But what we've learned in the last 4, 5, 6 months is that one day move does not establish a trend. Though we did see a shenanigan down move. It's not like we haven't seen anything like this before. Right, so let's not get too ahead of ourselves. Let's not get too emotional. So let's say in the micro term, it's a bearish in the micro term, especially the fact that we did lose that my short-term moving average, right? But again, we've done that before. We've seen that shenanigan before, right? So just for now, let's say micro term is bearish, but in the short term, I'm gonna say a little bit more neutral, maybe a little neutral slash shenanigan going forward, right? And obviously in the midterm, let's stick with bullish outlook in the midterm. But we've been focusing on the short term and micro term this entire week. So let's continue to focus on the short term, micro term, right? So this is the important level right here, right? Because that's where we gapped up, and we've been talking about this on the last weekend analysis, and then also this week and last week, that should there be any kind of shenanigan, like we got it now, today, we want to make sure that buyers, do you guys remember what I said? Buyers protect at least half of this gap. You guys remember that? So the partial gap can be filled, but we want to make sure at least 50% or so of that gap remains open. If you see something like that, it's going to favor the buyers, right? So I think with that, when bears were not able to fill that entirety of this gap today, you can see bears brought it down pretty fast, right? And then on the last hour, that's why. Why did we see all of a sudden out of nowhere bulls coming in buying it up? Because this gap was not fully filled. We've seen something similar right here. You see that this gap was open back in May 24th. And then, very, very similar price action. It's been, grinding choppy all day, all week. You can see first day, second day, third day, fourth day, fifth day. And then out of nowhere, we see a gap down. and then big, you know, a shenanigan down move, right? And then you can see when that thing did come down, what happened? That 50% of that gap remained open, right? And then you can see that we did see that upper wick here. You see that upper wick, right? And then you can see we were kind of slightly on that, right on that short-term moving average. And then a couple days later, we did make a move back above that short term. So first objective for the buyers, they desperately need to reclaim that short-term moving average. So the faster they can do it, the better it is. If not, if the price continues to kind of struggle beneath this short-term moving average, things could get hectic, things could get lethargic. So what the buyers want to do going forward, what the buyers want to do going forward is that if they can't reclaim that short term as quickly as possible, what they need to do is to make sure to protect this gap to be open. If we can see that, if that gap remains open, I believe at some point bulls are going to get right back up. And maybe this is a shenanigan that the bulls needed. Kind of, you know what the market is? Market kind of create this suspense, right? And then all of a sudden, you know, market creates this kind of quick panic, and then all of a sudden it goes right back up. How many times we've seen this happening? Pretty much this entire year and last year, right? So if that's kind of the plan, what buyers trying to do, right? Creating that little quick panic here, letting that weak hands to kind of phase out before they bring it up, need to kind of, you know, reclaim the short term and make sure to protect this gap here. And I think that we can do that. Obviously, for a bearish scenario, you're a bearish here, you're a seller here. You really want this market to see some meaningful correction that you've been waiting for the last 6 months straight, maybe 8 months straight, maybe since the last election, maybe October, November. Well, we need to see first things first, need to see this gap getting filled. And keep in mind though, my midterm moving average is residing in that. There's a lot to kind of overcome for the very bears. We got a gap here, we got another gap here, we got these guys. So obviously, first things first, this gap needs to be filled. Kind of get that out of the way, and then go after the this gap, because that gap's still open. But that, you know, today in price action, I would have to say, though bears brought it down, I think bulls still have the advantage. That's why I'm not totally flipping bearish in the short term. I'm gonna give it more neutral stance in the short term, and then once we reclaim that short-term moving average, it will turn back to bullish sentiment. Let's check out that oscillator, see if we can extract any more information. So we have something going on here, and is this gonna be the failure of this setup? Remember we talked about this setup, right? The market has been like grinding that setup, and then you see that oscillator here, and the market saw this swift move, right? And I was targeting of 460. Remember this setup? We've been talking about this entire week and last week, but market has been just grinding and chopping, lethargic, and just doing nothing. Well, so the question is because of this now, are we kind of you know, is that setup failed? Is that not gonna work anymore? So we're getting very close. So if this oscillator comes back down, let's say tomorrow it comes back down to the bottom of its span, right? Let's say it do that. I think at that point that setup is kind of sailed, because it's a momentum setup, right? So that there's that momentum here. You see that there is the energy that's been built. We broke out. There's that circle there, the purple circle, and then we needed to see a little quick retest, boom, right? Quick retest, boom, right? Quick retest. Boom, quick retest, boom, right? Yeah, we didn't see that. So the momentum kind of weighing down, and the momentum was not able to kind of find that traction, especially with today's downturn. I think that setup playing out is starting to look, not high probability at this point, unless if bulls can flip it very, very quickly. Only way they can do that would be a gap up. Needs to see a gap up there, pretty meaningful gap up tomorrow. We're talking 0.4. It needs to gap up above right here, this pivot right there. You see that little short-term, micro-term support resistance right there. You see those? It needs to get up above that. So like a 424, which is a 0.4% gap up, which isn't a lot. And then needs to stay up and needs to see at least all throughout the day kind of bullish run. If we can see a gap up 0.4% tomorrow and then like run all throughout the day, we can keep this momentum, because keep in mind this low right here. Are we in a downtrend or uptrend? Looking at things more short to midterm. Look at this. We are still in the vicinity of higher lows and higher highs. So we have to understand the overall sentiment, man, is still bullish because we're still in this uptrend development and cultivation, right? So with that, just bulls need to reclaim that short-term moving average as quickly as possible by gapping up the fastest way, or just straight up like bullish move on the first hour and stay up for the first 2 hours and have a positive, pretty nice bullish day all day tomorrow. If we can see some like that, this dream right here, this dream could still be alive as long as this oscillator can kind of get right back up from here. But if this thing goes right back down, well, all that energy, all of that that dream has been sailed. It doesn't mean that the whole trend is done. That doesn't mean that. But we just wanted to see that traction, and we just didn't see it happen. It looks like that kind of is that bearish divergence. This bearish divergence here, right? And I guess that played out. And obviously, it's with that peaks hitting it so many times, it loses a lot of its potency. And so it's not a huge down day. Obviously, only down 0.5. This market has been like lethargic and choppy so long that people are freaking out on 0.5% down day. You guys remember when we used to have 2-3% downers? So we've been kind of spoiled because this market has been grinding and marching higher ever so slightly for months, and so people are freaking out on just slight. So that really isn't a big deal because we see this kind of move without, we just on a normal fluctuation, right? I mean, it's not like we don't see these kind of down move before. Just normal down fluctuation, 0.5% is absolutely nothing when it comes to overall trend is concerned. So that's my presentation, but quickly I'm going to talk about this. So somebody let me know that I misspelled my banner here. So it's crazy because every time I make a banner, it's just, I always look at it over and over again. Sometimes it's crazy how your eyes make do a trick on you. That's why sometimes when you're looking at, when you do technical analysis, you have to be very, very careful and fair because sometimes your eyes do tricks on you, right? Eyes do tricks. So you can see there's a market bubble. The biggest one is its way. It actually has to be. So thank you for those of you who emailed me and who commented. It's right here. So I've changed it. Thank you very much. But I swear I didn't see it. I swear I didn't see it. Isn't that crazy how that is? And that sometimes that's how it is. Sometimes people don't see certain things. In the market, and especially when you're looking at the charts all day long, sometimes it helps to kind of have that secondary look, right? And so, anyway, so quick. Now that I'm here, so obviously, I've been promoting this special research I've done for my members. I just released it a couple days ago, which I believe in my research, in my findings, in my analysis, that a lot of people think that we are in that 2000 .com bubble top and the market, it is ready to crash down. In my research, in my findings, and I'm not talking about certain stocks or anything. I'm talking about the overall market. We're talking Nasdaq, we're talking S&P, we're talking Dow, we're talking overall market, right? So, and the S&P. And so, as far as the overall market is concerned, we're nowhere near .com bubble top that we've seen in the late 1990s. If anything, we're in the early 1990s before a huge bubble that is huge, explosive, bullish run that is similar to what we've seen in 1990s, and it's going to impact the entire market. But certain sector is going to benefit from this move more than others, which I talk about in this research report. It's a video research report, but I talk about my fundamental findings, fundamental analysis, which is also affirmed by technical analysis, also giving targets on how many years we will see this bubble lasting, and why this bubble is going to happen. Right, so if you want to take advantage of this, this research report, obviously, a lot of people have asked me if they can get this report by itself. I'm not gonna sell that by itself. Even if I do, it will be same price as 1 month of my investor subscription service. A fee for 1 month. So I think it's okay if you guys want to do this. I think a lot of people have done this where just sign up for 1 month and you can cancel it right away. And that way, not only you're going to get the special report that I've just released, but you would also get some other reports such as this, and maybe gain some video lesson regarding how the long term, the primary and the macro and secular, which you hear me talk about so much in these videos, right? But I don't have time to go through all this, and you can listen, you can learn about that so you can fully understand. Because if you understand a big picture, man, I mean, you are not gonna start freaking out just because there's like 0.5% down day today, and then obviously you're gonna kind of get to see what are the positions I'm currently holding, where am I investing, and things like that. And maybe in a month or so, if I'm getting into any new trades or if I'm adding into my current trades, you would also get some of the stock picks if there's availability, obviously, because I don't day trade, right? So I don't swing trade, so there isn't going to be always availability. But if I see an opportunity, but when I get into it, I'm a position trader and a long-term investor, as a lot of people know. So long-term investor meaning I'm gonna be buying these stocks, right? I'm gonna be buying these stocks or some ETFs or something like that, and I'm gonna be holding maybe year, 2 years, or 3 years, and I'm gonna fully ride that primary uptrend. But I also do ETFs, position trading. Those are I'm gonna be trading maybe double shares, triple shares, something like that. And if you get into Premier and VIP, there will be options trading with ETFs, position trading, which is going to be options trading, which I'm going to be using options instruments to trade for 3 months to 6 months to fully optimize, to fully ride that rally, right? So you can definitely take advantage of this, and market bubble. The biggest one is on its way. On its way. So you can obviously, and again, you can get all those as extra, but if this is what you really, I think it's worth it, to be honest with you. I think it's worth it to get this report, so then at least you get a good idea of what market, where we might be heading in the next 5-10 years or more, right? And so maybe you get a good idea of that. But if you've been thinking about joining Traders Club, and so then I do have June 2021 special invitation for annual memberships. We've got Investor Premium VIP. If you kind of click on these links, you'll get an extra 10% for this, extra 15% and 50% off. And keep in mind though, these regular price yearlies are already 25 to 30% off. So that's on top of that 10%. So that's almost like 40%. That's almost like 40-50% off going to these links here to take advantage of that. But then again, if you don't want to do any of those things, just sign up for 1 month and you can cancel it right away, so you don't have to think about it. And then you just get the report, and then you can get some extra stuff. And then at least that way you get a good idea of potentially what could be happening, right? I don't presume to know everything. I'm not guaranteeing that this is exactly what's gonna happen. But I believe that it's profound. It's very, very compelling. And as you watch this research, you realize this is probably something that you're never gonna hear from anybody else. You know what I mean? So I promise you're not gonna be disappointed in this research report. You're not gonna be like, oh my god, I wasted my money. I don't believe that. I think you're gonna find it very much helpful and profound and compelling. And also all the extra stuff you're gonna get, you're gonna think that could be a good money spent. Otherwise, I'm not gonna just, you know what I'm saying? I'm not gonna bring this up. So anyway, you guys enjoy the rest of this evening, and let's see how the market plays out tomorrow. We'll go from there. You guys enjoy. Have a wonderful evening, and good luck trading tomorrow.